Doshi, who's managing partner and CIO PMS from Bay Capital Investment Advisors, who's joining us now to discuss market fundamentals and his top sectoral picks. Nikunj, we're trading in, a pretty volatile global environment. The trade deal is behind. The FII flows seems to be trickling back in, but now there's this US-Iran tensions that are lingering, on the markets domestically. Earnings, we've seen some, strong shows by some of the big names. How are you placed here in terms of risk reward? Where do you see, for the Indian markets in the near to medium term?
Thanks for the opportunity. And just a correction, my name is Nikunj Doshi and not Joshi. I think you mentioned Joshi. Just on the markets, I think overall the earnings season has been good. Most of the companies reported good numbers. So top line growth has been good. There was some pressure on EBITDA because of the one-time labor cost which most companies incurred. So overall, I think earnings-wise, we are seeing good positive trend going ahead. There's a capex picking up. And overall, we are seeing good trend in the earnings for FY27. As far as global flows are concerned, again, it's more dependent on geopolitical developments rather than anything else. And there, again, it's a fluid situation. So we can't take call on the global flows as of now. But if things stabilize, then we definitely see good flows coming into the Indian markets. And overall, we are very, very positive for calendar year 26 for Indian markets.
Nikunj, in that case, what are the sectors where you're more bullish? You see a strong bottom-up fundamental, and what are the sectors where you would trim your position?
So, we are focused mainly on four themes in the market. So one is digitalisation, second is consumerism, third is financialisation, and fourth is outsourcing. And in all these areas, we have been focusing not for last 6 months, but last 10 years, I would say. We have been focusing on most of these themes. And I think most of these themes have played out. What we don't invest in is commodities because we can't predict commodities prices. We don't invest in real estate, infrastructure, which are capital intensive businesses. So as an investment philosophy, we focus mainly on capital light, asset light businesses with a good kind of earnings momentum possibility and leverage in earnings also.
Nikunj, hi, Rima here. I remember in the last conversation, you said you're not very focused on traditional IT services.
Yeah.
You're more bullish on companies benefiting from AI adoption, where AI productivity gains will drive earnings for AI adopters. Something on those lines is what you had shared. Can you share some names of companies which would be big beneficiaries where we will see AI productivity benefits flow through?
So I think most of the manufacturing companies, see, right now what we are talking of IT services and IT related companies, but what we see main benefit coming is for the manufacturing companies using AI. So definitely these are the capital, I would say engineering companies or the manufacturing companies which are likely to benefit most from this AI adoption in terms of their operations and in terms of their productivity enhancement. So I think these are the sectors which are likely to benefit. For the IT as a space, I think any like development comes with opportunity as well as threats. And right now the market sentiment is such that it magnifies threats first. So for IT services, right now everybody is looking at what are the threats possible and ignoring the opportunities. Whereas in digital companies, digital first companies, we see that there's a lot of potential of productivity gains and efficiency gains. So take example like Ixigo, which is using AI in most productive way, or even car trade also means everybody is now concerned about what will happen with car trade as a business model. But I think they are using AI rather to support their operations than being threatened by the AI development. So I think these are the digital first companies which are likely to be mainly main beneficiaries of AI adoption.
Sorry, so Ixigo and car trade, are these stocks that you're recommending to your clients on the back of the same theme, AI beneficiaries?
As a disclaimer, means it's part of our portfolio investments. Both these stocks are part of our portfolio investments.
Okay, Nikunj, on the financial space, we've seen a massive rally in the PSU names. Take the likes of SBI, stellar third quarter numbers in the last 6 months alone. It's up 40-45%. Some of the Bank of Baroda and other names also, Union Bank, are up, anywhere in the range of double digit or more. Do you see a further rally from here for these PSU names? Because some of the foreign flows also seem to be adjusting away from their private peers, where the gap is narrowing into these PSUs. But do you see a headroom for further upside from here on, or what would trigger a re-rating?
So I think for banks, what most people look at is I would say growth in earnings, means NIM growth. And second is definitely their CASA ratios and other parameters which people look at. And PSUs, I think, are better placed in terms of CASA because of the client base that they have, as well as in terms of when the economy picks up and when capex cycle is triggered. These are the banks which have wider network to capitalize on that. So I think PSUs are benefiting from those kind of developments happening right now.
Yeah, they are showing an improved earning visibility, better ratios than some of their private peers. But Nikunj, any thoughts on the NBFC space as well? Any key themes, the trends you're seeing there? Any buying opportunities?
NBFCs are likely to mainly benefit from the cost advantage, means the reduction in their cost of liabilities. So I think that is going to percolate over next 6 to 9 months, I would say. And that's where their cost of borrowing will reduce and they'll be able to improve on their margins. And growth-wise, I don't see any issues with NBFCs in terms of the asset growth. And quality issue also, I think for most of the NBFCs is behind. And most of them have provided for the poor asset quality credits. So I think overall, NBFCs are also better placed in the whole financial system.
Quick word, you said you also like manufacturing and they could be beneficiaries of the AI productivity benefit. So digital first companies you spoke about, any in the pure play manufacturing side?
So again, engineering companies, I would say, means capital goods companies, I would say, are the better placed to take advantage of A, capex cycle picking up, and B, productivity gains and operating leverage, what they will have going forward. So all means any engineering or capital goods companies, I would say, are beneficiaries.
Thank you, Nikunj. Great chatting with you for joining in. By the way, the Nifty's hit that 25,600 mark, now trying to cross it. Bajaj Finance, Bharti Airtel, L&T. These are some stocks where you are seeing an up move in the last 10 minutes. Get into a break. We'll come back with more on the market.